When empires fall, they rarely announce it. The signs don't begin on battlefields, they begin in banks. For nearly 80 years, the US dollar has ruled the world, the oil of global finance. Every contract, every shipment, every loan, measured, settled, and stored in dollars. The system was so dominant it became invisible, a digital bloodstream running through every economy on earth. But now, quietly, something is changing. For the first time since World War II, nations are trying to build a financial world that doesn't revolve around Washington. A new system, digital, decentralized, and defiant. Its name isn't official yet. Some call it the BRICS currency. Some call it the digital reserve. But its goal is clear: to escape the dollar's gravity. It began as whispers. Russia, China, Brazil, India, and South Africa, the BRICS nations, grew tired of watching US sanctions decide who could trade and who couldn't. They saw what happened when the dollar became a weapon, freezing assets, cutting countries off from SWIFT, locking entire economies out of global trade with the flick of a switch. To them, the dollar was no longer neutral. It was power, concentrated in one nation's hands. So they began building their own escape hatch. First came bilateral deals, oil traded in Yuan, gas sold for rupees, gold bought for rubles. Then came new institutions, the BRICS Bank, the cross-border payment system, and proposals for a reserve currency backed not by promises but by commodities: oil, gold, grain, rare earths. Behind it all, one question echoed. If money is power, why should one country hold the plug? What's emerging is not a coup, but a quiet rebellion. Instead of invading territory, nations are reclaiming sovereignty over transactions. Instead of tanks, they use trade routes. Instead of war, they use code. Because the next global reserve currency may not be printed at all. It may be programmed. The dollar once ruled because it was trusted. Not perfect, but predictable. When gold vanished from the equation in 1971, belief replaced backing, and that belief became habit. But trust decays quietly, the way steel rusts from the inside. After 2008, the cracks spread. To save the system, central banks printed trillions. To fight the pandemic, they printed trillions more. Debt became infinite, and inflation the quiet tax that followed. Around the world, governments began to ask the same question. If America can print its own money forever, why can't we? Enter the digital dollar, a new form of power born not from metal or paper, but from code. A central bank digital currency, or CBDC, programmable, traceable, absolute. To its creators, it's progress. Instant payments, no counterfeits, no delays. To its critics, it's a cage with invisible bars. Every transaction, every wallet, every life. Visible, measurable, controllable. For Washington, it's also armor. A digital dollar would extend control at a moment when China's digital yuan is already live in hundreds of cities and Russia's digital ruble is spreading through Eurasia. Each new system bypasses SWIFT, the old Western backbone of payments, and each reduces dependence on the US dollar a little more. The next reserve war isn't being fought over oil fields or stock exchanges. It's being fought over who controls the code that moves the money. Picture a single trade. Today, when a nation buys oil, the payment passes through banks, clearinghouses, regulators, all under US reach. But in a digital network built outside that reach, the same trade could settle directly. Yuan for oil, rupees for gold, rubles for gas, no middlemen, no oversight. That's a nightmare for the Federal Reserve, and the dream for every nation that's ever feared the dollar's shadow. Because if trust was once America's greatest export, technology may soon replace it. Every empire defends its currency like territory, because money is territory, the invisible kind. In the last century, oil pipelines decided who ruled the world. In this one, it's data pipelines, and right now, those lines are being redrawn. China built the first major alternative. Its digital yuan, the ECNY, links citizens, banks, customs ports, and global shippers into one programmable web. Transactions clear in seconds. Fees vanish. Surveillance is built in. It's not just convenience, it's control. A Chinese exporter selling copper to Africa can now be paid directly in ECNY. No SWIFT message, no Federal Reserve window, no Washington permission slip. Russia moved next. After being cut from SWIFT in 2022, Moscow expanded its SPFS network, a domestic payment rail that links Eurasian banks directly. India began testing a digital rupee. Brazil tokenized its bond market. South Africa launched cross-border pilots with the BRICS Bank. Each small experiment chips away at the old architecture. Behind closed doors, central bankers now study each other's code like Cold War scientists inspecting missiles. They call it interoperability. But what they really mean is control. Whose ledger will become the global ledger? Whose digital ID will authorize trade? Whose sanctions will still matter when every payment moves on rails beyond Washington's reach? The new currency war is silent. No bombers, no embargoes, just algorithms competing for trust. And the most powerful weapon isn't gold, oil, or even interest rates, it's adoption. Because once a single shipment of oil settles outside the dollar and succeeds, others follow. Confidence shifts, momentum snowballs, and the illusion of monopoly begins to break. That's how every empire loses power. So not in a battle, but in 1,000 quiet exits. Every reserve system dies the same way, slowly, then suddenly. The British pound once ruled trade for a century. Then came war, debt, and America's rise. By 1945, the dollar had taken the crown. Its supremacy fed itself. The world needed dollars to buy oil, and oil producers needed dollars to buy everything else. A perfect circle, still until the circle cracked. When Saudi Arabia began accepting yuan for oil, when India settled coal trades in rupees, when Russia priced gas in rubles, that circle broke for the first time in half a century. A small crack, but faith is fragile, because the true foundation of any reserve currency isn't metal or guns, it's belief. And belief erodes faster than balance sheets. After 2008, after 2020, after trillions of new dollars appeared from nothing, that belief began to fade. Foreign central banks trimmed their treasury holdings. BRICS countries hoarded gold and local reserves. The question whispered through trading desks and ministries alike. If the dollar can be created without limit, is it still a store of value or just a measure of confidence? Once the answer tilts toward doubt, the erosion becomes unstoppable. Not because the math fails, but because trust does. The petrodollar system bound the world together with oil. The digital reserve currency now tempts it apart with code. The contest isn't who can print faster, but who can program smarter. Every line of code in a central bank ledger is a policy disguised as software. Each update rewrites the global rulebook a little more. And the more nations build outside the dollar's reach, the more the world's faith in that reach begins to slip. The end of trust never looks dramatic. It looks ordinary, like central banks diversifying portfolios, like energy trades in new denominations, like citizens quietly converting savings into anything else. Empires don't collapse when they run out of money. They collapse when they run out of believers. Every revolution begins with promise and ends with control. The digital reserve currency is no different. It promises speed, safety, and independence. But hidden inside the code is something ancient, power. When money becomes software, whoever writes the software writes the rules. Most people hear digital currency and think of what they already use: credit cards, online transfers, mobile wallets. But those are payment apps, not new money. They simply move deposits that already exist in private banks. A true central bank, digital currency creates the money itself. It lives on a government ledger, not a bank's balance sheet. The code that processes your payment is the same code that creates your currency. The distinction sounds small, but it changes everything. Central bank digital currencies, the CBDCs explained in policy papers as modernization, sound harmless. But behind the language of progress sits the architecture of command. A wallet can be frozen with one click. A purchase can be approved or denied, based on who you are, where you are, or what you buy. A payment can even expire if not spent fast enough. To governments, that's efficiency. To citizens, it's obedience disguised as convenience. China's eCNY is already live in more than 260 million wallets across 25 major cities. It settles instantly through the People's Bank of China's cloud ledger. Officials describe it as controllable anonymity. Small payments remain private, large ones are fully traceable. In pilot programs, authorities tested smart stimulus funds that disappear after 30 days if unused. That isn't policy. That's programming behavior. Europe's digital euro is now in its design phase at the European Central Bank. It's marketed as a complement, not a replacement, for cash. Yet draft plans show wallets tied directly to the ECB for the first time. Every digital euro would carry a unique serial ID, allowing instant tracing across borders. Officials call it resilience. Critics call it a backdoor to surveillance. And in the United States, the digital dollar is moving quietly from theory to infrastructure. The Federal Reserve's FedNow system, launched in 2023, already enables instant settlement between banks, a precursor to retail CBDCs. Pilot studies under Project Hamilton and Project Cedar are testing tokenized dollars issued directly by the Fed. Washington promises privacy, inclusion, and efficiency, but every transaction would clear through a network owned by the state. History shows that when data and power collide, privacy rarely survives. The same code that stops crime can stop dissent. The same algorithm that tracks corruption can track opinion. When money itself carries conditions, freedom becomes a setting, not a right. Digital currency doesn't just record what you buy, it can decide whether you buy. The next monetary order won't need soldiers to enforce it, just software updates. This isn't the first time money has reinvented itself. In 1944, at Bretton Woods, 44 nations gathered in a New Hampshire hotel to rebuild a broken world. They tied their currencies to the US dollar, and the dollar to gold. Trust was born from metal. In 1971, that link snapped. Nixon closed the gold window and belief replaced bullion. Money became a promise, and the promise was America. 3 years later came the petrodollar, an unspoken pact between Washington and the Gulf. Oil would be sold only in dollars. In return, America would guarantee security. Energy became the new anchor for value, but anchors never last. Just as gold gave way to oil, oil is now giving way to data. And the next reserve system won't live in vaults or barrels. It will live in servers. Each era of money mirrors its technology. Rome minted metal, Britain stamped paper, America wired credit. Now, the world codes currency. China's digital yuan is its Bretton Woods moment, a prototype for a new global currency system. It records every transaction without ever touching a US bank. When BRICS leaders propose a BRICS digital currency backed by commodities, they're not creating something new, they're reviving something old, money with tangible roots, oil, grain, gold, rare earths. The difference is the medium. Instead of metal coins, they use code. Instead of ledgers and marble banks, they use distributed servers across continents. Every civilization believes its money will last forever. Rome did, London did, Washington did. But money survives only as long as people believe the story it tells. And right now, the world is writing a new story, one that no longer begins with "in God we trust," but with a line of code. 3 worlds are on a collision course. The first is the CBDC world, centralized, programmable, government-controlled. Every transaction runs through a national ledger. Order, efficiency, compliance, by design. The second is the crypto world, decentralized, borderless, ungoverned. It was born as rebellion, a promise that code could replace trust. Its believers see Bitcoin not as speculation, but as protest, money without masters. The third is the commodity world, where nations like Russia, Saudi Arabia, and Iran are tying value back to things you can touch: oil, gold, grain, energy. It's slower, heavier, but tangible, a reaction against the abstraction of digital finance. Each world solves a problem the others create. CBDCs offer stability but demand control. Crypto offers freedom but breeds chaos. Commodities offer reality but lose speed. They can coexist for a while, but not forever, because the same trade can't clear through 3 systems at once. At some point, the world must choose which language of money it speaks. The battle is already visible. China's digital yuan experiments with cross-border trade through its mBridge network, connecting Thailand, the UAE, and Hong Kong. The US explores Project Cedar to keep the dollar relevant in wholesale settlement, and the BRICS Bank quietly tests tokenized reserves for inter-member trade. These aren't isolated pilots. They're rehearsals for the next Bretton Woods. The stakes aren't who prints the most, it's who programs the standard. If CBDCs win, the world becomes efficient and watched. If crypto wins, the world becomes free and fragile. If commodities win, money regains weight and loses speed. The likeliest outcome? A hybrid. A world where trade is settled on digital ledgers backed by tokenized commodities, gold, carbon, oil, but priced in regional reserves like the BRICS coin, the Euro ledger, or a digital dollar. In that system, the US dollar won't vanish, it will simply share the stage. One currency among many, not the conductor of the orchestra. That's not collapse. That's transition. But transitions break things. Every empire believes it can manage the shift peacefully. History says otherwise. Wars used to be fought for land, then for oil. Now, they're fought for data. And the new battlefield is your currency. The digital reserve is no longer theory. It's already here. inside pilot programs, central bank servers, and payment networks that never touch a single US bank. The question isn't when the next currency war begins, it's whether we'll notice when it's already over. Because the next reserve currency won't arrive with parades or signatures. It will arrive quietly, in your banking app, in your paycheck, in the invisible code that decides what your money can and cannot do. When oil stopped anchoring the dollar, the world entered the age of digital money, and the contest for who controls it has already begun. History won't record this as a crash, it will record it as a shift from printed power to programmed power, from nations that ruled with gold to networks that rule with code. The age of the petrodollar is ending, the age of the digital reserve has begun. Next time, we leave the machines behind and turn to something older and more fragile, because every financial empire, no matter how advanced, still runs on one thing: belief. When that belief breaks, numbers stop meaning anything. That's where we go next, to the collapse no algorithm can prevent.